let's say, second most important financial statement, which is the balance sheet. Balance sheet presents the assets, liability, and equity. Usually the balance sheet is also like it can be by months, right? By quarter, by year. We have to differentiate the difference, P&L, and then the balance sheet. I would say the P&L or the income statement, this is more focused on the operation. Sales minus the cost of goods sold, minus the expense, total expense for that period. Balance sheet is more focused on the whole company, not just for that period, but the balance sheet is focused, or let's say, present the overall financial status of the company, because it shows you the total assets, total liability plus the equity. This is actually the balance sheet, called the balance sheet, right? Plus and minus. It has two, let's say, the two parts, right? One part is we call it the assets. Okay, all the assets should equal to the total of all liabilities plus the equity. As you can see, this here we call this accounting equation. So the assets is the liability plus the owner's equity. The owner's equity is belong to this liability side, right? Because all the assets belong to the company, right? That retained the earning, or we call it the owner's equity, but this is more belong to the owners. It's their money, but this money is retained by the company. P&L is more for the in my opinion, for the operation. Also, for sure, for the owner as well. The balance sheet, it can be pro forma or the actual, right? One is estimated, one is the actual or realized. This one, we also needed to compare with different years. As I said, we have two parts. The first part is the asset, and then the second part is the liability plus the equity. Current assets, cash, account receivable, right? You understand what that means, account receivable. And then you will have the inventory. The inventory is the stocks in hand, all right? We needed to, this is not the cash, but we assume, right? This is the money. But somehow, like there are tricks, right? So very little cash, but they have a lot of inventories. But I might ask a question: what if you cannot sell your inventory? And then we have the total current assets, and then we will add the total fixed assets. All right, the fixed assets, I don't need to read that, right? The land, the buildings, the equipment, right? Those fixed assets for this period. For sure, your fixed assets will lose part of its value. It's called depreciation. You have this total fixed assets. So we will invest the money in the stock market, in the futures market, right? This is very common for this agribusiness because we need to manage our risk, and then by hedging in the futures market. Add this up. This is our total assets. Since this is called a balance sheet. Right, so you need to know the assets should be equal to the liability plus the owner's equity. Start from the current liability. This is the money we own, right? So account payable, right? The payable is that the money we need to pay in the next months, right? Okay, and then the tax payable, right? And then that will be the long-term debt. Let's say the long-term liability or the long-term debt, right? Long-term note payable, long-term debt payable, and then this two together, this is the total liability. It's easy to understand. We actually already talked about the retained, the earning or retained the equity. This is the owner's equity. We have this so-called like the capital stock because we have some retained earning, right? And then we can buy the stock. But this money belongs to the owner. This is the retained earning, and then plus the net income. For the last period, actually, we are making 219.5. So put together, you will see we have the total owner's equity, which is 610. Add up this liability and then the equity together. This is 1,020,000. Right, 1,020,000. Sorry about that. And then this number plus, not plus, these two numbers together assets equals the total assets equals to the liability plus the owner's equity. Simple, right? Very simple. But here, in this sense, do you see anything related to the operation? Sales? So we know that the financial situation, but we don't know exactly about the operation situation. Those are the two documents that you need to focus on. I mean, I call this two most important one. You know, let's take a quick look. Year one, year two, difference. Again, you know, I want to start, compare with this total assets, right? The current assets minus 15%. But the good thing is the fixed assets. We are investing or we are purchasing some fixed assets. So this can be a positive. Total assets actually is increased 12%. If you are in a high tech, this increase, the total assets can be increased, 100 or 1,000%, right? It depends on the growth. That means for high tech companies, they are facing the environment is very dynamic, very complex, right? But for the agribusiness, I would say still dynamic, still, let's say that still dynamic is still complex, but it depends on who you compare with. Total liability increased 19%, okay? Yeah, give or take, this is not bad. Owner's equity increased 7.5%. 12% already show us the performance is pretty good. When we start our let's say business, we call it simulation, right? The management simulation project. You also needed to review the sales. You needed to review the P&L, and then you needed to know the balance sheet.